Welcome back to Krown's Crypto Cave, and hey, happy Monday. You made it all the way to Monday, so my God, drink some coffee with me, have a good old morning, and of course, always wishing you the best of the best, the happiest of the happiest Mondays ever possible out there. Until next Monday, where I'll wish you an even better one. But just before I get started in here, I do want to say in about 20 minutes, I'm probably going to put the mic down because I do need to take my chicken out of the oven. I'm really excited about that, really fucking hungry, as it is deathly cold over here in Helsinki, Finland. And let's get into the charts right here, right now. So closing a new week and opening up a fresh new weekly. Bitcoin has essentially done nothing over the weekend session, as we said was, pretty much likely. And when I say nothing, I mean not really breaking the range either which way. So going over here to our BitMexico chart, our BitMexican chart, you can see that, yes, it's hovering between this 3150 and 3250 area right over here. A nice $100 range, and essentially, very little has happened. So this is what I mean by ranges typically don't get broken over the weekend session. And right here, right now, you actually do see Bitcoin getting rejected a little bit from this 3240-ish area. So yes, I am trying to sell a little bit of these 3250 calls. Yes, I have bought some back of the 3500 strike calls, and PNL a little bit smaller because of that. But hey, there's not too much edge on these guys left, so there's not really a great opportunity cost of leaving them open. So I did buy them back for about 0.0065 Bitcoins over there for 5 of them, and I'll try to get the rest of them back pretty damn soon. Anyways, as Bitcoin kind of hovers around this level, I don't really want to be adding too many positions. This is a very tricky area because, again, remember, we are right on the weekly 200 simple moving average. And this is going to be the big news of this stream, is that essentially, yes, the weekly did close above it, so we have not technically broken it. A very low volume kind of hang at this area. And again, this is what I mean by Bitcoin kind of entering the phase, the next phase of the bear market. If I cannot fucking stop stuttering, that'd be great. The next phase of the bear market, where essentially, instead of having the crazy flushes like you did over here, you start to roll. You have that rolling hills type action until you probably get your capitulation event. So, if I were to give my opinion on what's likely to happen this week, we probably actually do dip below the 200 simple and probably actually do close out the week above it, I'd imagine. But I believe that we probably do make our way into this next blue box territory sooner rather than later, I'd say. Sooner rather than later. So, again, this next blue box territory coming between about 2400 to 2800. Again, this is an opinion, not technical analysis. Technical analysis does agree with this. Of course, timeframes are not within technical analyses domain, at least in the way that I do it and the way that I've seen it. I just don't know anyone who's done it over time to be, consistent over time with doing like time analysis. Anyways, we do have this, what do you want to call this? Well, it was first it was a what's it called? A bear flag right over here. So you can, whoops, Jesus Christ, man. Now I'm just fucking up all my charts. Let me just scroll on back on over there. There we go. First it was the bear flag right over here, and we could make a measure move off that, which never really got negated, by the way. That one is associated with a different one, with a different guy, but basically, yeah, we have this guy right over here, bear flag. That gets broken down to the downside right over here. Then you don't really have like a full-on flush. Again, it's kind of that sludgy behavior, so it morphs into a broadening wedge, which essentially has a very similar measured move. And then after that, we get stuck in this block down around here, 3250, before the weekend began. And what did you create then? Well, basically, you had a left shoulder, head, right shoulder right over there. Volume works out. Continuation head and shoulders are pretty rare, but they do happen. And when you are going on the side of the actual trend, I will accept it and look for it. And all of these things have a measure move, as you can see, pointing down here. And where is it going down towards? Well, essentially this horizontal right over here. So I did this a little bit backwards, basically showing you where I'm looking for first, and then why I'm looking for there. But this 2900 level, which again would be that next massive blue box territory on our Bitstamp chart right over here. Also in this blue box territory is going to be rounded out by the 886 Fibonacci retracement, which is actually where you did bottom out in 2014, just as an aside, right over here. And also, if we put on the volume profile, you can see that, yes, there are some nice higher volume nodes in this area, similar to what you had at the 6,000 level. And the only ones that you really have higher than that is this guy right over here at around 1100, 1200 area. By the way, the one at 4,000, 4,200 was nowhere near actually the size and girthiness of these guys right over here. So again, we are kind of at the last line of defense, the last of the Mohicans for the 3,200 level right over here. If we do break that area, then you can see that there's very little holding this thing up from that 28, 2,900 level, according to that guy. Also coming back on over here. Really good historical price action. You see this massive drawdown right over here. That was one of the times that China Bitcoin or banned Bitcoin, China Bitcoin banned. It's like, Jesus Christ, how dyslexic am I? Disgusting. Anyways, so yes, historically speaking, this is an area of high interest. You can see a perfect retest of that former swing high and then up. And well, if we were to come back down on the same way, well, with everything considered, the volume profile, the measured moves, the Fibonacci retracements, and you could even say that the 200 simple is really coming in around here as well. That all that will hold some sway. So yeah, I do have my eyes on that, and that is essentially what I'm looking for. That comes with a contingency, as always, as everything should, because technical analysis is not black or white. We're just talking about probabilities and probabilistic setups. But that, the contingency with this is that is, on the table as long as we're essentially below 3250. And when I say below 3250, I mean closing like higher level dildos below there. If you want to be a little bit more lenient, you could say all the way up to 3275. However, if Bitcoin were to break out above 3275, or if you just want to call it 3300, make it easy on yourself and just easier to kind of say, in English words, then yes, I don't really see much stopping this thing from 3,500. Even then, is that a strong resistance right here? No, I believe that you'd probably have a test of 3,600. So the next real bounce that Bitcoin does have, I believe that you will probably come back over and test 3,600, this blue box over here, which was the breakdown area from this descending triangle. That Bitcoin essentially went sideways for like a week and a half, 2 weeks right over here. The only, thing resembling somewhat of a bounce throughout this nice downtrend. So again, just looking at this guy, and that's what I'd be looking for. So, if I'm giving my opinion on it, again, separating technical analysis from my opinion extremely deliberately, because I don't, my opinion, I don't trade, but I can just kind of say it willy-nilly. I'd say, yeah, you probably do break down here, go to like 28, 2,900, and then probably have a swift bounce, or relatively swift bounce back up and test 3,600. And at that point in time, we're going to find out if the bounce is going to be a legitimate reversal or not. Now, of course, if it's going to be a legitimate reversal, it has a lot more fucking work to do than that. But if we can get back above there, that would start to be a little bit interesting. For the higher time frames, just put in perspective, the weekly 200 exponential moving average, the purple line right over here, which is now sloped to the downside just ever so slightly. And this is reactive, or more reactive than a simple moving average, but it is slightly sloped to the downside. That is coming in around where? Around 4150 even, so on Bitstamp. And that is very, 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 very important to me. As long as Bitcoin is below there, I am very, 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 very bearish. And I mean, as long as Bitcoin's essentially below 6,000, I'm pretty damn bearish. And I'm just, meaning that I'm looking for places to get short. I don't go long, is what I should say. I don't have long deltas in a bear market. I just look to close shorts in a bear market. That's all. And again, I think a lot of people are learning this the hard way recently, that when you try to play bullish formations or just go long in a fucking bear market, you're just fighting against gravity. You had like maybe one decent play in here, and the rest was just, you could just make life easier on yourself and look for the shorts. So again, I'm just looking for bounces to get short on. I don't really have my short position over here is pretty much hedged up. Because I don't want to have open deltas right now. I want to just be using options if I do want to have any long exposure, because we are getting closer and closer to that area of big bounce. So I'd be more inclined to like take off that long hedge once we see that, or at least once I can judge the actual reaction from that. For now, you're traditionally speaking, you're right on the 200 simple moving average, so it's not a time to be greedy with that, in my opinion. Of course, I don't think it's not a, if you do have shorts open, there's actually no real reason to close them right now. I mean, just in the most basic of basic ways, you have lower high to lower high for literally over a year now. But if we put on the 10 simple moving average, which is what I use to govern this shit, this is there's a lot more contingencies to this than what I'm about to explain right now. But as long as you're below this red 10 simple moving average over here on the daily, there's really no reason to let go of your shorts. So I did do that prematurely. early, but I didn't really have too much time to watch over my positions this past weekend. So that's kind of my reasoning for that. By the way, the 200 exponential moving average is migrating now to 6,100. It is right at that former breakdown area. So again, another very, 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 very massive resistance migrating below that critical breakdown point. Remember, when Bitcoin essentially went sideways for, 11, 12 months right over here, between 6,000 and about 12,000, that created a massive cause leading to this effect. And as long as we're below the breakdown line for that built cause, again, I do have to be in bear market mode. So with these higher level exponentials getting below this area, it just puts more and more intense pressure on the downside as the algos and whatnot become a little bit more aggressive with their selling. Speaking of becoming a little bit more aggressive with your selling, we do have the 3-day dildo death cross right over here, fresh off the press. The green 55 crossing the downside of the purple 200. And where are those blown down? Well, they never really. I mean, they actually were above 6,000 for quite some time, but now both below, it looks like, or the 200 exponential in the 3 days 60-50ish area. So let's do the weekly rounds also of our Trollinger band. So again, just kind of rounding out the case of why I believe this is likely to continue a little bit more before we still get a pullback. Again, I put everything else that we just talked about on a much higher level than what I'm about to discuss right here. The Trollinger bands, which I pay attention to, but I don't really care for all that much, just because they're kind of like a meme indicator, kind of like, like a step up from the TD sequential, the TD sequential, but Jesus Christ, man, it is snowing so hard outside. But still not, not my favorite. Anyways, yes, we did close below on a full thick sized dildo below the lower Trollinger band on the weekly over here. So we are still trending outside the lower Trollinger band. Now, this current weekly is actually above it right now. The lower Trollinger band officially coming in around 3170-ish area, which is also the weekly 200 simple moving average. So this is going to be a very interesting week to me. But hey, as long as you're kind of outside the lower Trollinger band and closing weekly dildos outside the lower Trollinger band, the trend is just more likely to continue, as we spoke about before. All the measured moves, all of the volume profiles, all of the higher time frame exponentials, everything, in the past history coming into play right there. But this, also adding as a secondary confirmation tool, saying that, hey, it's still time to be short. However, the second that we close a weekly dildo inside the lower Trollinger band is technically probably going to be a good indicator for an actual bounce. So yes, I would be looking for that. It's going to take obviously another week, because we just ticked another one on at 7 p.m. Eastern Standard Time on next Sunday. We'll get another weekly. So for now, it's going to be a little bit of a waiting game. But hey, looking at this guy right over here, it's very obvious that we are respecting this bottom side, or this lower Trollinger band right over here. Even rejecting a test to get above it right over there, and just down, closing on your lows. Likely to lead to new lows. As the saying goes. Until it fucking doesn't. Anyways, putting back on the exponentials, because that's what I care a lot more about. Yeah, you do see that the weekly 200 exponential governing price action as well. So this, as long as we're below there, I mean, that's pretty fucking bad. And I do believe that Bitcoin's going to be living below there for quite some time. That's a very powerful exponential. A lot of bots and a lot of algorithms will be programmed to respect that specifically, and intensify their selling algorithms. Putting on our drawing tools over here, I would just want to point out one more thing to that fact. These red arrows pointing to this dotted trend line right over here. That is the inception. That goes all the way back to the inception of Bitstamp and the genesis of Bitstamp, so to speak, and never been broken up until about 4 or 5 weeks ago. Right over here. This was November 19th, the week of November 19th, I should say. So about a month ago. And then on the same dildo that we actually killed the 200 exponential right over here. I mean, it's not like killed, it's probably gonna get back over it at some point in time. Yes, I do believe in Bitcoin long term, but for the short term, very fucking bearish. But hey, we retested this dotted trend line right over here and rejected from it. So to me, that says that yes, we are actually respecting that area. Does that become our governing factor, going forwards here? Well, I did a full on stream discussing the long-term situation. My God, man. The matrix, as I call it. So if you want the more long-term analysis, going off of that, definitely check out yesterday's video in the long-term analysis playlist, as that is what it is for. Anyways, so I'll just leave it at that. Anyways, yes, does that become our governing factor going forwards here? Probably. I'd probably say so. I'm actually going to get rid of some of these right over here just because they're not really applicable right now. I guess this guy right over here at around 10,000 is the most, but we're very far away from that. So fair enough. Yeah. Okay. Cool. Alrighty. So let's go check out the 3-day. By the way, I forgot to do this while we were on the Trollinger bands. I do apologize about that, but let's just scroll back on over here. Lower Trollinger band on the 3-day is, funnily enough, coming in around that 2,400 level, which, by the way, is rounding out that lower blue box territory. So again, just more things adding around there, just kind of wrapping up the case for that area. Again, a lot of things in this area. Trollinger bands. We got Fibonacci's. We got volume profiles. We got measured moves. We got historical price action, and that is enough for me to really respect this area's potential, potential bottoming area for, to be perfectly honest. Yes, it does have potential to reverse this asset. Does it, someone got mad at me the other day for calling this cryptocurrency, or calling this crypto asset instead of cryptocurrency. Whatever, man. It's like, if you're gonna get mad at something like that, like I don't have the fucking energy to be like, dude, oh my god. What the fuck ever. Anyways, that is enough indications of things coming around this area as potential reversal point. Very strong chance for bounce. In fact, an extremely strong chance for bounce, but probably, as far as a reversal goes, I need to see this thing get back above the purple 200 exponential on the weekly dildo time frame, and close above there. So that would be, the weekly on this guy, not the 3-day. So back above this area right over here, and I'd probably really consider it as a potential reversal. Of course, above 6,000 is my no questions asked area, and I need to go pick up my chicken. So I'm just going to be 1 second. I apologize for this, but literally just 15 seconds. I'll be back right here. Okay. And back. Oh my god, it smells so good. I'm so excited to eat it. Alrighty, so yes. Okay, so that's kind of rounding out that area. Of course, if that area fails, we'll know by the reaction. Of course, it's going to take this is going to take, likely a long time. And if that area were to fail, then yes, I do start to look towards this 1,300 level down around here. That would make the next most sense to me. We do have a nice Fibonacci coming down around there. You can see it's a 942, a lesser known one, but yes, it does exist. You have to put it in. It's not going to be on your default tool, but yes, it is one. And we have some nice horizontals coming around this area as well. And also that would be the prior high of your former market cycle, which, remember that there's kind of like an unspoken rule that the highs of your prior market cycle become the lows of your next. Doesn't mean it always has to go to that area, and Bitcoin has, didn't do that in the past, actually. It didn't do it on its first market cycle over here. This guy right over here, in this guy, that's actually 100% move up, by the way, just so you know. But and then on this guy right over here, yes, it did wick past, but it needs to close below it in order for it to be confirmed, done. Or that would, from a technical analysis standpoint, that would present like a lot of fucking, it would suggest that the asset is like legitimately in trouble. I know that sounds crazy to go from 20,000 to 1,000 to be like, it's kind of fine. It's fine, but that actually is, in a way, in a way I'd be looking at it. Monthly over here, interesting as well. Also, completely forgot to talk about this, but the monthly over here, yes, we are breaking the green 55 exponential, and the first pass was a little bit of a bounce, but to come back down to it, retest it, and then make new lows below our prior, not fucking good, man. And yes, the cyan line right over here coming around 2,400, just another thing coming around that area. So again, to round out that 2,400 to 2,800 area of support, just a little bit more. So yeah, I'll kind of get off that topic now because we need to talk more about the more applicable price action. Now, CMEs over here did open up the day, I believe. They opened up yesterday at 6 p.m. Eastern Standard Time. Yeah, they opened up a little bit higher, so 3170-ish area. Do we pop back down to the 3150 area over here and fill the gap officially? Probably. Probably do. Again, that's just another thing kind of aligning with with my thoughts that we probably go lower from here. I know a lot of people are looking at this as some sort of like a, what are people calling this right now? Probably people are always talking about an inverted head and shoulders or some, yeah, probably going to be they're definitely going to be talking about this as an inverted head and shoulders. It's not. The neckline would be completely wrong, but what it could be, and I really fucking hate this one, but it actually does work right here, and it also confirms my biases, but a rising wedge going on over here. Again, wedge, I'm a wedge racist. I fucking hate all of them. They have the least they have the least probability to play out in my experience, and they're just prime for fucking around with people. So whenever you see someone like call out of, we have a falling wedge over here, okay? All right, it's on fucking Rapecoin, and guess what? This thing's going to the moon, so you better buy. And you always hear that bullshit on crypto Twitter. People who talk about rising wedges, falling wedges, whatever kind of wedges. And I even made a mistake in that explanation there. It's a falling wedge that would be going to the fucking moon. But again, they just don't work out so often that I can even say that. And I'd be saying, hey, if you really go off that, if you really do a lot of pattern trading, my heart goes out to you. I salute you because in my experience, I know a lot of people get wrecked doing that kind of shit, and just in my experience, it doesn't work out. But yeah, technically speaking, you do have a rising wedge over here. The volume characters do work on this guy. However, again, it's not too helpful if you do break this area at 3,200, the support. Yes, you do have the support down around here, right around 3,150ish area. So you got it. You got a few things to chew through. But overall, it does seem to be respecting this area. You couple more wicks testing up around this area. Do we have any sort of divergence on the RSI? Yep, we do. We have some bearish divergence on this guy as well. So, usually you want to see those things coupled with each other, and that's essentially what I'm looking for that to likely play out. But again, if Bitcoin does take out this area right over here, 3270, pretty much all of these measured moves going to the downside do come offline. Although this higher one right over here, I mean, you can make an excuse for it, but we'll get to that if that actually happens. Anyways, just more things pointing down to that area. Let's go check out SPYs right here. Again, traditional markets closing out the week on their lows, actually breaking my nice support trend line right over here, 263, which is the one that I'm really watching. You do have the daily Dillo death cross on the on SPYs over here. Again, the only time that you really had that beforehand was 2015 on this massive drawdown right over here, and before that was 2008 right over here, which was a little bit of an exaggerated reaction, but yeah. Again, this does look like a topping formation to me, but the traditional markets are just so they're so dirty with how they can fake you out. So notorious for some of the most nasty fake outs of all time. This head and shoulders topping formation over here does have a measure move taking us down to the 235 level, which is right around our 200 exponential and this nice support ledge. And we have broken the 100 exponential right over here. But again, you always have to be careful with this thing. Yes, this does look like a bear trap. Yes, you do have the blue 30-something moving average slope to the downside, which is the one that I care about most when it comes to slope analysis. And for all intents and purposes, this is a massive rejection of the 10 simple right there. But again, I've just seen so many fucking fake outs in traditional markets that really does make you think. I'm in no real rush to short this anyways. I don't trade traditional markets anymore. But I'm not in any rush to do it to begin with, because you're likely to come back and retest this yellow 20-minute exponential even if you do break it. So again, when it comes down to it, this can take a while as well. This is a monthly dildo chart over here. Yes, you do have bearish divergence on the RSI. Yes, you do have bearish divergence on the Stokes over here. Yes, it does look like it wants to come down. You're getting a sell signal right over here as well. But could probably still wait it out, and there's plenty of edge to be left on this trade. Again, measure move, our first target would be about 235 to 240ish area. Below there, you got 220 if that area does fail. But same thing as Bitcoin, you got to take everything as it comes. No pun intended. Terrible thing to say. Anyways, let's go check out the longs and shorts on Bitcoin, by the way, because they are actually really both going up right now. So we have longs going to the fucking moon starting from December 11th. We've gained almost 10,000 longs, 10,000 coins long on Finex, which they will likely have an average price if they started at December 11th. Where's their price going to be at? Let's see, December 11th would be right over here. So they literally have a pretty shitty average price, at least below where the current price is right now. Some guys obviously worse than others. A lot of guys probably getting in below here as well. But overall, not good. And shorts, on the other hand, what are the shorts doing? Oh, nope, that's longs. Shorts over here, putting on a few positions as well, adding about 4,000 open short positions in the last few days from December 14th. So these guys, I believe, where are they adding from? Yes, so these guys are like right at break even, or they're either a little, they're pretty much right at break even. So both sides are, relatively stable. So when that sort of thing happens, I basically say, okay, you have a you have a downtrend for over a year. You have heavy pressure on price action right over here, and basically I would be on the short side regardless. Now, I don't really have like spot open shorts for myself. I'm pretty much delta neutral on most of my things, so I will go over here to our data mesh and check out what's the rate that they're paying. Longs are paying absolutely no rate at all, so these guys don't really have to worry about like their daily interest cost if price action goes sideways here. Shorts, on the other hand, are starting to creep up now, so this is starting to get definitely above average, and on the lower spectrum of kind of high. Not 0.03% is not, I mean, again, it's not terrible. It's not until it could get like double that, and I'd be saying, okay, that's pretty fucking high. You're gonna be paying like thousands of dollars a day, or more than thousands of dollars, like $5,000 a day, just to hold a $1 million position. But it is starting to get on the radar for that. And keep in mind though that almost 4,000 of these shorts are hedged, so we really actually have only about 36,000 shorts naked versus 36,000 longs. So it's really parity right now. So both sides jockeying for positions. That tells me that we're likely to have a big move soon, because there's a lot of there's a lot of interest. There's a lot of people tied up in positions right here. So some side's going to have to give. Obviously, I'm going to go with the side of the trend right now. But again, I don't really want to have a position here. It's too close to all these major sports. Squeezing out another few $100, in my opinion, is not worth the opportunity cost of losing more sleep. I'd rather play options, which I'm a lot more comfortable doing. So again, that's what I'd be looking at right over there. Now, I do want to bring up something a little bit different that I haven't talked about at all, actually, but is quite interesting. So I want to go over here. People are looking at this, and perhaps it's better to be seen on the inverted chart, right? Yeah. So people are going to be looking at this, and they're saying, Krown, look at this, man. We have a rising wedge on the inverted chart. Do you know what that means? It's definitely going fucking down, man, because I read the Bulkowski book, and I've been trading for 5 months, and you know what? This thing's about to go lower on the inverted chart. So obviously it's the inverted chart, and we're getting what is typically a bearishly resolved pattern. But again, I've explained my sort of apprehensions with rising wedges to begin with. More likely to break out to the downside, so that'd be to the upside on regular charts. I think it's just easier to see this way. That's why I'm representing it like that. That is interesting, right? Again, wedges of all shapes and sizes, in my experience, are the least likely to play out. I fucking hate them, and typically it's people who might do analysis, but they don't really trade, or they at least don't fucking show their trades, who will talk about these sorts of things. Now, let's go over here, back to our other chart, and I'm just going to put it in here, because remember, that was our inverted chart, so it's going to look different. Now, I'm going to bring you back into history, right? Now, keep in mind, we have really started to get into the downtrend, really with breaking the 6,000 area right over here. Things have gotten pretty aggressive, but you saw this to the upside actually as well. You actually had a great example right over here. Could it be that we're actually seeing something quite similar? You had a rising wedge to the upside right over here. In fact, let's make it a little bit better. Yeah, there we go. So you had a rising wedge to the upside right over here, and a lot of people got really bearish at 8,000 last year, not understanding, again, market cycles, and that wedge has just fucking sucked. Just fucking sucked, man. I've seen a lot of people go poor, go broke, trying to trade wedges. But hey, you broke it out to the upside. And that's technically not supposed to happen. Just like a falling wedge is not supposed to break out to the downside. A rising wedge is supposed to break out to the downside, and vice versa. I'm getting very convoluted with my explanations. To get it more simply, rising wedges are traditionally supposed to break out to the downside, or it's like fuck that. And falling wedges are traditionally supposed to break out to the upside right over here. So, yes, this one did do what it's not supposed to do. Oh my god! We actually went parabolic after that point. Now, keep in mind over here, Bitcoin was already well into its uptrend, doing pretty damn well. Could it be that we're at the point in the market cycle where Bitcoin does something a little bit crazy to the downside as well, where you have a pretty intense downtrend, then you put in a falling wedge, and then you break that out to the downside, go parabolic, you put in your bottom, and then you're able to consolidate, kind of like you did over here, and then you start your next market cycle. Well, maybe. Again, I just wanted to speak on that because I see a lot of people pointing this out, and if you've been tuning into this content for a while, you know my thoughts on wedges in general, and really most patterns in general. Bitcoin loves head and shoulders and flags though, so I do like that, and also broadening wedges, which I do believe in broadening wedges, because what is a fucking broadening wedge really? It's just a sloped head and shoulders, what it really fucking is. But of course, people never talk about that. So it'll look all cool and sexy while people talk about this for a while. But I do, I just wanted to get that out there, because you have a great example of last year where you did the complete opposite, and a lot of people got really fucking bearish trying to short every little last up above 8,000. It's like, how about we just liquidate all you fucks? Sorry, I shouldn't say we. They liquidated you. Yeah, blame it on they. So yeah. Looking at this guy right over here, again, to me, another rejection of 3250, but I don't want to be too damn harsh on it. As long as you're below 3270-ish area, we're going to call this an inverted head and shoulders. It's not. Don't be silly. Okay, so we spoke about a lot of things over there. Let's go check on the MVT signal. We should have another tick on this guy. Yeah, again, the oscillator is starting to make its way down a little bit further, in between about 50 and 100 now. And if you're not familiar with this thing, it's called every top and every bottom in Bitcoin's market cycle history perfectly. And after it does top out above where my cursor currently is now, it goes at least where my cursor currently is now, down here to the downside to bottom, or a little bit lower. So we are still above that area of threshold. So it's not necessarily on my radar yet, but also agreeing that yes, Bitcoin has plenty of room to go to the downside if it wants to, if you're looking at that oscillator, which again has been perfect in Bitcoin's history. So that's what I'd be saying about that guy. Anyways, I think that's about what I wanted to say on this video. Let's see. Just scrolling through. Yeah, I think that's it. So again, just kind of wrap up the lower time frames over here. A lot of bearish formations. You had a descending triangle right over here. You had a bear flag over here, morphed into a continuations head and shoulders, and kind of you're making a rising wedge over here. So a lot of bearish formations, which do have measure moves pointing us again down to that I believe it was 28 to 2900 level right around here, which also does match up with our next blue box territory on our Bitstamp chart right over here between about 24 to 2800, which also matches up with the 886 Fibonacci retracement, which also matches up with this nice historical trend line right over here, and also matches up with our nice volume profile right over here, which also matches up with our nice higher time frame exponentials that we saw with our monthly, and also matches, and it also kind of agrees with our weekly Challenger band, saying that continuation is a little bit more likely, and it also matches up with the fact that we're below all major moving averages on our higher time frames right now, that I pay attention to, saying that it's more likely that we head on down here than up initially. But hey, how will you know that that's likely to be wrong, or that we're likely to play out a little bit of a bounce, maybe to 35, maybe even 3600? If we do get back to 3600, that'd be quite interesting for a trade. That'd be like the next trade that I'm really interested in. But if Bitcoin crawls its way back above 3275, then yeah, I think that it could have a nice little rally, bringing you back up around there. So again, that's what I'll be looking for, and that's essentially what's on my mind right now. Of course, if you do break this to the downside, still got to deal with 3150. But if that does get broken down officially, yeah, I think that you do make your way down towards the 2900 level. So again, as long as you're below this area right here, all those things are in play and are more likely to happen sooner rather than later. If Bitcoin does get back above this area, then that kind of does tick some of those off, and perhaps we do start playing out of balance throughout this week. But again, that's that's just gonna have to be seen. So that's how I'm gonna be responding to whatever happens in price action down around here. Hope this one finds you well. I'll be back on later for some live stream action. Hopefully we get some price action as well. That'd be beautiful. If not, if I don't see you then, well, I just wish you a happy day once again, and take care.